Here we go. So everyone can watch us over Christmas. So good morning, good morning, good morning. John Oliver here. It is Monday, December 23rd, 2 days before Christmas, 2 days before Hanukkah. Don't know how many times Hanukkah has fallen on Christmas Day, but must be pretty special if they both fall on Christmas. As you know, Christmas is based on the Gregorian calendar, and the Jewish calendar is something totally different. So Hanukkah changes each year, whereas Christmas does not. Little bit of useless information there. Anyway, let me share my screen. We get straight into it. Here we go. This is Monday, the 23rd of December. Oh, I forgot to put December in. Anyway, disclaimer as usual. We want to make sure that you know that we're not providing financial advice. Trading in the financial markets can involve risk of possible losses of past performance, not indicative of future results. Please read that disclaimer as we go forward. Morning, Francisco. I will be going over a few things here first, and then we get into the markets and look up some setups as well. But I just wanted to give you a couple of things to think about over the holidays as well. So it is a new week. It's Monday. I know that it's a holiday and we're all relaxing and everything, but it might be a good time, now and leading up to the end of the year for reflection, to reflect on where you are in your trading journey. If you're not where you want to be, what do you need to do to get where you want to be? I'll be doing two more of these. This is the third to the last one. So I've become a GFU educator. I will be training on this sniper scanner starting in the new year. My first one is on January the 2nd. And so my session times are going to be here. I'm going to do a session on Sunday evening at 8 p.m. And then I'll be on at Tuesday, 8 a.m., Thursday, 8 a.m. That is Mountain Standard Time. The recordings will not be on YouTube. They will be within the GFU setup there. So looking forward to that. I'm very excited. Hopefully we'll be able to impart some good knowledge to you and keep you on track with your trading as well. Following on from my last one, we said about the volatility index being above or below 20. Last Wednesday we had, a lot of volatility in the market, and it was the largest one-day advance since 2018. And we did go higher than 20, so there was a high level of volatility in the market. But currently it's now under 20, or it was a few minutes ago. So the volatility is getting a bit less. Obviously, we're getting to the end of the year, and what we're looking at is a lot of brokers and the financial institutions will be looking to, get out of their positions leading up to the end of the year, closing out the books for the end of the year. So, we are going to have some movement from now to the end of the year. We're not sure where it's going to go yet, but we're going to try and get a handle on that as well. But the volatility index, I don't see that being above 20 running up to the end of the year. We'll probably see some volatility in the new year, new president coming in, et cetera, et cetera. So keep an eye on the VIX. You can look at that on TradingView as well. If you want to do some Christmas reading, this one here, the Candlestick Trading Bible, is something I highly recommend. You can search it online, you get it free. It's a PDF, you can download it, look at it on your devices, your iPads, your iPhones, computer, whatever. And it goes over all the candle patterns that we discuss on here. So when you hear me talking about dojis and haramis and morning stars and evening stars, head and shoulders, bearish candles, bullish candles, this book here, which is free, you can find it anywhere, is what everyone bases. This is really the Bible. There's obviously good training inside GFU. If you go to Manny Q's page and go through his trading forex basics, he discusses candlesticks and movements and everything else. But if you want a nice book that you can read in front of the log fire while you're drinking your eggnog or your glühwein, then grab a copy of this Candlestick Trading Bible. And it's very simple to read. It gives you 1 page per candle pattern. So it's very easy to go through this. You can mark up the most common ones if you want, but I highly recommend this. Obviously, Greg has recommended reading Think and Grow Rich by Napoleon Hill. Again, you can get that online as a PDF and it can be free. So have a look if you want to buy the Audible book or a paperback. Obviously, you can buy that at your favorite bookstore or online, but there are free versions of that going on as well. I'm going to go a little bit over Fibonacci when I look at the when I look at the charts. It's something you all should be aware of. We use Fibonacci to not only look at where our retracement levels are and whether we're going to get a continuation or a reversal in a pattern, but Fibonacci itself is based on spiral patterns found in nature. They're found all over the world in everything from waves to seeds to flowers to trees to everything. And so it's very, very powerful sequence of numbers. It's where, and in the number sequence, it's when the first number is added to the second number, and you just keep on going from there. So you can look up the Fibonacci number sequence as well online. It'll show you that. But this is very, very powerful. It's part of the whole creation, and it actually works very well on the charts and will give you not only possible reversals or continuation indicators, but it can also, depending on the Fibonacci settings, I won't go into that on this session, but another one, it will give you take profit settings as well. Okay, so we're going to get into the charts right now. We're going to see if we can catch some pips. So let's get into this and get over to, obviously we look at our economic calendar first. Monday, December 31st, no red candles. We're not really expecting any red candles on the USA. Tomorrow, Christmas Eve, we do have some red candles tomorrow. So be careful of that, 6:30 Mountain Time. We have new home sales as well, 6:30 Mountain Time. But obviously, after that, everything is running into Christmas, Wednesday, and so we won't be able to see anything. Thursday, we do have jobless. So Thursday is going to be some kind of movement in the market, but a lot of the brokers will be off. So don't expect the volume to be there as much. And Friday, we do have again, very little. It's only this red folder news on Friday. So that's all coming up. I'll be back on Friday when this has already happened because I'll be on at 8 a.m. Okay, so let's jump into the markets. Anyone have any questions so far? If not, we'll go straight into this and have a look at what's happening. Now, one thing to remember about Mondays is it's kind of a weird day. A lot of professional traders don't trade Monday because they feel there's not enough information in the markets on this week, because obviously they really only open Sunday afternoon with the Asian range, and late on Sunday with London open. So we haven't had a New York open until about 45 minutes ago. So not a lot of information to go on. But again, looking at these 4 hours, we will be looking at where these areas of interest might be. And obviously we've got, a little one down here. And the other one here is going to be, probably I'd be looking at between these two here. So literally between the top of these, the 4 dots there, and there's 4 dots under here. That's what I will set that on the 4 hour. And then we're going to drill down to the 1 hour. Have a look what that is. Look how perfect that is all the way along there for the 1 hour. And then we've got this long one down here for the 1 hour, but it looks like there's some areas in here. So we drop down to the 30, have a look down here as well. We are right in this zone here. So, you know, we can look at, I would say there's quite an area around there. And also, it's quite an area around there. So there'd be some areas of interest that I look at as well on the 30. Drop down to the 15 just because I want to see a little bit closer. Yeah, nothing makes my mind change there. So drop down to the 5 or the 3 minute. I also like the 3 minute as well as the 5 minute. You can see we did bounce off here and now we're looking to make a comeback. We just came through the oversold on the stochastic. So, but we are in sell mode. Here's our primary trend line up here. Blue secondary trend line, blue is below red and is expanding away. But we do have a possible movement here. And this is where you can throw your Fibonacci on here to see what's going on. So go to this fib retracement tool. It's based under this one here. And when you click on that, you want this fib retracement tool. And you go from the recent swing high to the swing low is one way that people will do it. Let me just put the numbers on the right hand side. So that we can prices up. Let's change this to over the right. There we go. So we can see them over there. So these are our Fibonacci sequences. When you stretch these out, these numbers out here, if you were looking at a buy, these are going to be targets you could possibly look at for your TP. See these numbers up here? So very often when we're predicting where the market is going, as long as we get rejection off the right line here and we're going back up. So this is not just a pullback, but it's a reversal. Then we'll be looking at these targets here as where our TP might possibly go. Always remember that with things like NAS and the US 30, these big numbers naturally cause support and resistance. So 21,400, 500, 600, 700, 800, 900 are obviously areas that could create some resistance. But you'll notice actually here, look at that. That line is pretty much right on 21,900. This line is pretty much right on 21,700. This line is pretty much right on 21,600. So when you get a lot of confluence like this with your big round numbers and your Fibonacci numbers, and look how weird these numbers are. They're Fibonacci numbers. They're just very natural numbers. Then if we get a reversal up here, we'll be looking for that. Not saying that we will, because what we need to do when we're still looking at the 3 minute, just so that it gives us a clearer idea. But what we're looking at is we go from the swing high to the swing low, and then we're looking to see if it's going to reject off the 382. If it rejects off that, it's going to continue down. The next one is the 50, which is a very, very strong area. And you can see it wicked up, didn't quite touch it and went down. So our anticipation on this is it's going to continue down. Okay. We would only think that there's going to be a reversal happening if it breaks this 618 range. So it can reverse off the 382, can reverse off the 5 itself, and it can reverse on the 618. If it breaks the 618, then it is a reversal, not just a pullback. But when we see this, this could be a possible entry for us. We've got to wait for this to come up, break through the overbought and break back down again. Or, as you know, I like to do is I have the horizontal line here on the 50, close as we can get it. And if it breaks back down here, if it shoots back down below the 50, that would be another reason to get in. But to go up to this overbought sold, we're probably going to get a candle or two that will turn green if it's going to do that. If it's going to bounce back down again from the 50, we're not going to see, we might see a little green, but we'll see more reds here. So that's how Fibonacci is such a powerful tool, is that it can give you these areas that you don't know are there right now, but it can give you these hidden areas of where the market might start trending away from. Does anyone have any questions on Fibonacci? Okay. That's and if you want to, I'm not looking at the chat, so if you want to ask questions, just unmute yourself. I'll answer the chat questions at the end. So we would need to see what is happening on the on NAS right now, but my anticipation is it's really struggling to break through this 50. I think we're going to be heading down. I think what I'm going to be doing is taking a little something there. I'll let you know how it goes. So let's have a look. We'll drop down to the 1 minute and we'll have a look. Our Fibonacci is still there. You can see quite clearly. There's the 382. There's the 50. Still not going anywhere. Although now what we're looking at, we're still not breaking this 50% line here on the stochastic. We've still got these wicks at the top more than at the bottom. So the buyers are trying to push it up, but they're being brought down by the sellers. So right now we're going into a bit of consolidation, and we would need to right now see where this is going to break out. It's trying to hit that 382. Again, you can watch this, leave this line up here and watch it to see what is going to happen. Okay. Shot right up here. We're in the overbought. Now let's see if it starts coming down here, crashing down through this. We might get a re-entry on the continuation of the bearish trend on NAS. Let's go and have a look at US 30, the Dow. See what we've got going on here. Same thing. Top-down analysis, higher time frames. We would be looking at nice little range down here, obviously, between these two dotted lines here. So with this, when I'm looking at this, the high and low lines, these lines here often give us a good indication. And in this case, I will put the top of my support range along the top dotted lines and the other ones down the bottom dotted lines. So you can see, I move these out the way. There's your top dotted lines right there. There's your other ones right there. When they're that close together, you know, we can get a nice little zone going on in there. And the reason I make them smaller on the 4 hours, you come down in the time frames, they'll get bigger and bigger. So we don't want to put them too big up there. And another one, we don't really have double confirmation, but I would be looking at, you know, in this area here. You know, again, you got those 4 dots there, just one set, but that's quite a strong area. We can see hasn't done anything on US 30. Drop it down to the hour, see what we've got else going on here. We have got a kind of area of interest here, especially with these dragonfly and doji candles right here. That is a real area of indecision right there. So, right on these doji, these two candles here, look at the candlestick Bible, you'll see what it is. There's obviously some, we're trying to get underneath it. We wick down, but we got to see whether we actually break that or not. Let's go down to 30 minutes, see if there's anything else showing up. Yeah, I think that line's pretty good there. We're going to see what's going to happen here. Drop down to the 15. On the 15 also, you can put your fixed volume profile on here to get your point of control going on here. Again, I won't go into that today, but I'll leave that for another training. But your point of control, you can find it, fixed range volume profile here. What I do is I would pick up a candle here, and you go back on you use it on the 15-minute for scalping. You would put it here and go back 6 hours. So that's 1500 right there. We would go back to 1500. We need to go back to 9, which is right around there. We put that in there. There's our fixed point of control right there. So what that means is that's where all the volume is right there. So that tends to act as a possible magnet. But if you were looking for cells, you want to be below this fixed volume control. This point of control is this line in the middle here. That's the maximum amount of volume that's in this session, this 6-hour session. And above it, you would see you would hopefully have some cell volume, but we've some buy volume, but we got cell volume all the way down here. We did get a crossover here, classic entry there. We're in the blue Bollinger Bands all the way down. This is the 15 minutes. So this was a sell all the way back from here, all the way down. There's no reason to get out of any of that. Fixed volume control is a bit more advanced. Again, I won't go into it quite yet, but just to know there are lots of tools along here, along the side that we are going to get into on further training. But obviously here we've got a very, very strong bearish signal here. Let's go down to the 5-minute, see what we got down there. Again, there's a recent swing low. That was the area of interest I was looking at. We hit it here, and now look on the 5-minute. We hit it once, twice, 3, 4, 5 times already. So this is a very strong area that we'd be looking at if we wanted to put a little area of interest in there. It would look more like this. And so that range is something that we got to look at. Is it going to bounce away from that range, or is it going to break up through that range? Right now, it looks like we're heading up to the stochastic here. We're going to go through it and come back down, and we'll have a continuation on a bearish trend. So, make sure you're looking at that when you are trading, especially if you're as we're leading up to Christmas, we want to make sure that we are finger on button. That means that we want to be careful of what we're doing. But look, we're going up here. We're heading into this zone. Let's see if we throw a fib on that so that you can see what we're looking at. Recent swing high, recent swing low. Right there. Let's open this up for you guys so you can see it. We started from here, went down to here. Yeah, there we go. That sell that I took on NAS just cashed in, so I hope you're in that sell as well. So now what we were doing is we were looking to get in for a sell here on US 30. This is the 5 minute that I'm looking at here. We are coming up to this 382. We've tried after we got, obviously before the swing low, this doesn't count. There's the swing low. This candle came up, almost touched the 382 and came down again. This one came up, tried to go through the 5, didn't make it, came back down again. Now this candle is our candle of interest. Is it going to stay above the 382? I did forget to put my labels on, countdown to bar close. So you can see we got 4 seconds left for this to close. We'll see if it's going to close above that 382 or not. That one did not, but this immediately opened up and is heading above. So now our next, we're right in this range again. So our range of interest is right here. And so this is very crucial. See all these wicks in this range. So this is a very, very strong range that we're looking at. We need to break out the top of this range or break out the bottom of this range before we can enter any trades. Right now we are struggling to break through. So we got to see where this goes. My feeling here is, again, we're looking at our tools. Primary trend line, down. Secondary trend line, down. We're back down very much in this blue Bollinger Band, indicating down. Bollinger Bands are the bottom one is pointing down. The top one is pointing down. Bollinger Bands are expanding. So when they're expanding, that means it is not consolidating. This is consolidation here, where the bands are running pretty much equal. They're not expanding. When they expand here and here, that is when we see some movement. And you can see a nice big movement down. That's on trend. This is counter trend. Here again, we're seeing a big wick up, which is showing you the buyers are trying to take control, but they're not getting there. The sellers firmly in control again, firmly in control all the way down here. Buyers are trying to make a comeback here, so we just got to see how strong the sellers are going to be in this range. You can see how close it is. Let's drop down to the 1 minute here so we can really see some action going on in here. And you can see quite clearly, again, we're right in the middle of this zone, and we want to make sure. Let's go back to the 5 minute. Let me just move this in a little here. Hold on. Let me grab this corner. I'm just going to move it in there so I can see my labels a bit closer on the 1 minute. Here we go. So again, look at this. Look how strong that zone is. Look how strong this Fibonacci is. It's trying to break the 382, try to break there, trying 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 to break there. Now it's heading down. We've got 13 seconds left to see where it goes. But it does need to break this area. First of all, to even consider anything counter trend, although you could have taken this. You can see on the 1 minute we did cross over. We did bounce on the oversold for a 1 minute scalp. Counter trend, if you were confident in your counter trend abilities, that would have been an entry right there. And on US 30, 529, you would have picked up, probably somewhere around 45 pips. If it goes to that middle range there's your 50 pips that Jim likes to get. In that one counter trend trade there, you would have made your pips. But you would have also made your pips on this on trend one here, this on trend one here, and this on trend trade here. Actually, I probably wouldn't have taken that one. That one is a good one. This one is a good one when it bounced off here. Let's put our 50 in here so that we know where that roughly is. And you can see very clearly here, there's some hesitation in the market right here. So look at that, it's bouncing down. This is a new candle forming, coming right off the middle of our range. It's not a Fibonacci number, but it is the range that I drew up that I thought was a very, very strong area of resistance starting back here. And it's been hit so many times. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I mean, it's such a strong area. I mean, we look at a 3 minimum to maintain that area. So when you get up into double figures, that's a very strong area. Now we've got some pressure going up. So let's see what happens here. Don't forget the 5 is still our first number here, 618. Definitely if it breaks out, we're going to reverse. But right now we're still struggling around there. So if you're trying to trade US 30, just keep an eye on that area. Let's go and have a look at Bitcoin quickly, just to see where we're at on Bitcoin. 93,000, wow. I'm not going to mark Bitcoin up because we'll be here all day. But, you know, again, start at the 4-hour, identify where your support and resistance lines are. A very strong one right there. And so, you know, definitely be looking at that area there on the 4-hour. This is the 1-hour. Yeah, it's just this double bottom here is obviously quite strong. So that's good where we could be heading to down here. So I definitely have probably a little bit above that around there would be an area of interest to see whether it rejects off that and starts going up. We are in a downtrend on the primary. We're in the downtrend on the secondary. We are oversold right now. So we might see a little push down to this line and then a bounce up a little bit, but it probably is just a little pullback, not reversal. XRP I was looking at earlier. And let's go to the 4-hour again. Yeah, again, clear lines in here. Drop down to the 1-hour. So here you can see your area here with this double bottom here is is an area of interest. But the other areas I'd be looking at would be the 2000. So that's a round number. I'd be looking at the 2100 because that's a round number. Can't get it exactly on the charts, but close enough. And obviously right here, we'd be looking at this area of interest of whether it's going to break through here. All right, 30 minutes, see what happens. Yeah, so looks like, you know, we're in a downtrend, primary, secondary downtrend, blue below red. We're in the lower reaches of the Bollinger Band. We're in the blue zone. Bollinger Bands are starting to expand right here. So it looks like we're going to hit this zone. We'll see what happens if it breaks this zone. We'll be looking at targeting this area. If it breaks that, we're going to target this area. If it breaks that, we'll target this area. And don't forget what that means is it doesn't mean it's going to break this areas. If you see what I say, it's if it breaks these areas. So these areas are areas of interest, and we've got to be sure it breaks them before we can take a continuation trend. Or if it bounces off them and creates support, you know, is it a reversal or is it a pullback? So, you know, that's what we want to see. So what does that mean exactly? It means if this comes down here to here, reverses for a little pullback, and then might continue down here, go through here, reverses for a pullback, and then might continue down here, reverse for a pullback, and then down to that level. That's kind of the patterns that you look for when you're looking at these support and resistance lines. Is it going to do that? Is it going to bounce off it and then break it? Bounce off it, then break it, bounce off it, then break it. And then obviously your pullbacks are where you're looking for entries to come in for a continuation trade. All right, let's go and have a look at gold for David and see what is going on here. Let's go to the 4 hour. After this, we'll stop and break for questions, unless you want me to look at anything else on the charts here. But here is our 4 hour on gold. Obviously, we got a nice area down here that I would be looking at. More down in that range there. Very, very strong range up there as well. So obviously this area here is a great interest. Drop it down to the 1 hour, see if we've got anything more. Yeah, we're right in that area there. Hopefully everyone can see that. You know, we're looking at this touch here, that touch there, that touch there, that touch there, and these touches over here. So how we would draw that up is I would probably look at this range right in here. We're right in the middle of that range here. So, you know, again, we're in that range there, we're in that range there, we're bouncing off there, we're reaching it here, we wicked into it here, we wicked into it here, we actually crashed through it right here up to here, created new resistance. We're coming back down here. Now, sometimes gold will bounce quite happily between ranges like this. And you can get some good trades just doing this. You know, and especially in these markets, like when you're in Christmas, when you're in a slow market, when you're not possibly getting the big moves, you know, even though this looks like consolidation and range, there is enough pips on this. You know, up here is 630 and down here is, you know, 610, 612. A lot of pips just bouncing between these two ranges. So, you know, use the stochastic down here. Look for getting in buys when we're breaking up. Look for getting in sells when we're breaking down. And you'll probably see, you know, starting here, we hit this range and then we bounce down. So you could get in for a sell here, be on trend down to about here. You saw a bounce up, giving us a warning that we could bounce up. So when this wick down here, good idea to get out. Went back up again here. Look, bounce back down right there on overbought. That was your entry right there for a sell. Came all the way down here and look what's happening again. Now we're bouncing up from oversold. So this could possibly be a nice entry, taking it back up to this level again. Okay, that's on the 1 hour, don't forget. So let's drop down and see what that looks like on the lower levels. Oh. Yeah, same thing. Range holds on the lower levels. Let's drop down to the 5 minute. Look at that. Yeah, holding all the way along here. Now we're just waiting to see what's going to happen here. Let's drop down to the 3 minute. And don't forget, I'm not trading on the 3 minute as a scalper. I'm trading on the 1 minute. So the 1 minute is where I'm looking at my trades here. And I don't know what that is. Let's get rid of it. There's lots of movements within those. Don't forget primary trend is down. We just broke down through there, so that would have been a nice continuation there, even though the secondary was above. We did break through the overbought right there on gold, David. So possibly a nice little scalp there on gold. That was a good little entry. You can see the primary trend line, as we've often said, also can be a nice support or resistance line. And right here, there's massive resistance here. We kept trying to get through, trying to get through, trying to get through all the way along here, all the way along here. Tried it again here and finally gave up and down we went. So when you see these kind of patterns, you can be looking right here. You can see an area here where this broke through right here. We got this downward trend here, but if you look at it, it's on a green candle. And if it's a bullish movement you're looking for, you have to wait for the corresponding bullish candle, which is actually that one. So if you got in there as it broke below the overbought there, you would be looking to take it all the way down until possibly here or here. Okay, and if you did that again, you would have probably got in around halfway down that candle, let's say. On trend, probably took it down to about there. Would have given you 23 pips easily on that. Not a lot of volume. And again, let's see where our other ones are. Well, that one's in the white zone. I don't like trading in the white zone, so I wouldn't have been taking that one. This one, you got a crossover here. So you're on trend. Primary is on trend. Secondary was a crossover here. We didn't really get a match up on the stochastic here, though. But these two here, and because you're in this, you've got a big candle down. You know that I like to, when a candle crosses through, let's see if we can blow that up so we can see. When a candle like this goes through both lines at once and also crashes into the blue zone here, that's a very strong bearish candle. So that probably would have been where I would have got in. We got the crossover of the primary, of the secondary. We're below the primary. We're in the sell zone down here. We could have taken a few pips here. This might have given you cause for concern to get out, although the blue line did stay below the red line. And if you did stay in, you would have caught up with all these pips here. When you saw this hitting this green range, don't forget this green range had already marked up, you would have your finger on the button. So when you saw this big wick coming in, it's not staying. And then this turned green, that would have been a nice entry. And of course, you can see here, we bumped up through the oversold on the stochastic here, which would have been another indication to get up. So your trade would have been in there. Your short position, if you got in here on this candle, let's say you got in when it hit the blue range here, your stop loss would probably be, well, your stop loss would probably be quite high actually because of these long wicks here. You want to be above those long wicks. If you're really safe, you want to be above these two wicks as well. But the recent swing high here, a little bit above that, and then coming down here, you still would have been aiming for your 1 to 2 risk reward ratio. You would have never hit your stop loss. Even this went into the white zone here, which I don't like. It never got anywhere near our stop loss up here. The blue stayed below the red on the secondary trend line. and 1 to 2 went all the way down there. If you're being more aggressive, which I like to do, and look at 1 to 3. So I often mark mine up as 1 to 3, but I will happily take it at 1 to 2. But the other thing that you would do, if you were looking at this range here, let's drop a little trend line here. Don't forget, this is your stop loss here. And let's put your 1 to 3 down here, because I'm going to take that this box off so we can see it clearly. So there's your entry right there. There's your take profit, 1 to 3. That's your stop loss. Never hit the stop loss. What you would do, as after this continuation, you went back down there. Don't forget your entry was right here. Okay. So when it went back to your entry, you still haven't got your stop loss here. But what you would do is, as it pulled back down below, the first thing you would do is move your stop loss to break even. Leave it there. Make sure you've got a clear run down. Once you got this other big candle here, you can start moving your stop loss into profit. Not much profit, because I would have aimed for the top of that last swing high there. But as it dropped down here, when you got this big candle here, you would have taken this all the way down, again just above this swing high here, and you're well in profit. So you're already in profit from here to here, no matter what happens. That's the power of moving your stop loss from break even into profit, into more profit. And even if you're targeting a 1 to 2, this would keep you in the trade past 1 to 2. And so what happens when you got this other big candle here, that's the one that you move your stop loss to. Now you've got another candle here, and you can start moving your stop loss down lower. Now, you're not going to near the swing high now, because what you're trying to do, you're now trying to lock in these pips. And what we see here is we've got a crossover up on the stochastic oversold. So we are looking on this candle. It's not a bullish candle, so we're not taking it yet. But as soon as this candle started painting, this is a bullish candle, and we know on the stochastic we're heading up. That's where we could have got out. So you could have been sliding your stop loss all the way down here, gone down a bit further. Even if you were thinking this is a pullback and you're going to see it going further down, your stop loss would have been here above that swing high. And so either you got out manually and took those pips, because that was 1 to 3 you were looking for, or if it came back and hit your stop loss here, because it did do quite a big reversal, it would have still taken you out in that profit. And your profit from here down to here, this line, would have been nearly 30 pips. That's very big on gold. That's nice. Okay, I'm going to stop the recording now. We're going to open it up for questions. I'll leave that share button up there right now. No, I'll stop the share button. And then what we'll do is we'll stop the recording.